When we're looking at Aussie dollar, we need to look at the overall trading range that we're seeing on the daily. So we can see it's from this swing low to this swing high on the daily chart. We have a daily point of interest that I'm looking for buys at. And we can see that we have a collection of equal lows forming, which we'll see a little bit cleaner on the 4 hour and below. But basically keep in mind that we would be looking to buy in the discount area. When we go to the 4 hour chart, we can see again that we have these equal lows being built, our daily order block, and basically that's where I'm looking to take longs. But when we're looking in the current range of where price is, this is the 4 hour trading range that we're currently in, from this swing low to this swing high right here. Now, of course, if you do count this as a swing point, you would have a break of structure right here, which would mean your trading range would have been from right there. New trading range would have been this point. And as we can see, price didn't break this high. It didn't break this low. So effectively, your trading range would be, oops, let's do this with a ray line, be a little bit cleaner. Trading range would be like this. Now, keep in mind, if this is what you're considering a break of structure, this penetration, we could also take that a step further then. I'll get rid of these points here. And we can just say that now that we've broken this range in price, we are now on this range in price. So if I again put the ray line in, we have that and we have this point here. When we see that and looking at that, we are in a downtrend, broken to the downside just barely. You can see that we have this point of interest, price tapped into it, and we're starting to continue down. So when we're looking at that, sells make sense from more of an intraday perspective. And of course, if I just refresh my trading range ever so slightly, we can see that the new trading range that we are currently within is this point. So ideally, we'd be wanting to look for sells in this premium zone. And if we go down to the hourly chart now, what we can see is this is the hourly trading range that we are in. We attempted to break this swing low, but we actually did not. And we reacted off of this point of interest. If I go up to the 4 hour, although this didn't actually break true swing structure, we did see imbalance come into the markets. It didn't, this retrace did not fill the imbalance, and then it continued pushing to the upside, mitigated this point of interest. You can see that tap and then that push down, but we can see that there were some orders here and they were respected. Price spiked down into it and then pulled back very aggressively. So when we're looking at that, that's in theory a point of interest. This clearly was, there clearly were some orders resting within that. And now when we're looking at, you know, how to trade this going forward, just get rid of this. What I am mostly looking at is still within this hourly range. Yes, we do have this pullback right here, and we could count that. So what that would mean is we have more of a trading range like this, but I'm still expecting price to come back up to this point of interest. We have a lot of imbalance that should be filled. We can see that this was that point of interest that I identified in the commentary. It's obviously tapped into it and had a couple great selling opportunities, even just targeting prior lows. If I go down to the 15-minute, we can see still have that refined order block. That's what I'm looking at price to start gravitating back up to. And you can see, you know, we basically got large momentum entered in the market at this point of interest, and it's starting to push price back to the upside. Now, if I'm looking for a long entry here on the 15-minute, the range that I'd be looking in is something like this. If I go down to the 1 minute, what we can see is there really wasn't any sort of clean entry. We've now broken the highs right here, but we really haven't done a whole lot. This is really kind of efficient, messy price action. You know, we're almost building trend line liquidity at this point. If a point stands out to me on here on the 1 minute chart, it's right here. We have a lot of imbalance. You can tell that a large order was likely placed at this price level. So definitely, if I am looking to take a more quick long, I'll be monitoring how we return back to this price, because everything past this point is pretty efficient. If I go to the 5 minute, we can just clean up the chart a little bit, but even then our swing point would be up here. We haven't actually broken that swing point as of yet. You know, we have our swing low here that was then broken quite impulsively, and we're just gravitating back up to that point. So really, I'm going to be patient and wait for price to come back up to here. If it does, Of course, if you want to look for some sort of point of interest in this point, we have the origin of the move, that is broken structure. If we go back up to the hourly chart, it is pretty efficient pricing. So it's hard to say if we will get a reaction at those points. As of right now, like I said, I'm just going to sit on my hands, wait till price comes up here if it does, and look for an entry, because I feel like if I'm looking for anything else up here, I'm starting to maybe try and push things a little bit. One trick that you can use, but I would strongly recommend testing it before you really jump into it. But when you get large wicks on, say, a point of interest, so here we have our up move candle before down move that breaks structure. Really, it just breaks the structural point right here, but it doesn't break here. So reading between the lines a little bit, but we do have this wick right here that we can look at. And then I did just see it on the 5 minutes, so probably me to get there. But basically, it's a way of refining to a lower time frame point of interest without actually using a point of interest. I've talked about it in a few of the commentaries in the past, but I never really went into too much detail. I more or less just drew out a wick and then put the 50%, as it usually comes to about the same result. But we could look at this point as a potential sell opportunity, but I feel like if price is willing to come back to this point, even if we do get a reaction, so if price does come back up here and we start to push away, what does that give us? It just gives us equal highs, more than likely, more liquidity sitting at this point. And what I would then expect is price to run back and continue down if this is where it's going to choose to sell off at, which is what I'm waiting for at this point. It's just super clean, and that's what I'm personally just going to sit on my hands and wait for at this point. And well done to anyone who did take the shorts at these levels. But yeah, that's how I'm looking at Aussie dollar right now. Again, we're still in that bullish trading range. The 4 hour, depending on how you look at it, the range changes a little bit, but at the end of the day, I think we can all agree, regardless if your trading range is between this impulsive leg or this impulsive leg, really we're waiting for a definitive break of that range, preferably here, so that we can get some sort of confirmation and look for an entry to go long, which would then continue our overall higher time frame trend. But we'll be patient, remain focused, and see what the market provides us, because right now, as we can see on the hourly chart, we are in a downtrend. We have this trading range. We tried to break this low. It wasn't successful. If we look at where price tapped into and ask ourselves, what is price doing? Why is it doing that? And we can see that we do have this point of interest. We had imbalance that needed to be filled right here. It's a little bit cleaner on the 4 hour, but the 1 hour also shows it quite nicely. Although on the 4 hour, again, like I had said, we haven't actually broken true structure to create this point of interest. We still can see that a large order was placed here. It did create imbalance. Price did run away quite rapidly from it. As we can see, if I just go here, it took about 2 days, 4 hours to create the high, or maybe even 2 days, 12 hours to create that swing high there. And then it effectively took 4 days to come back to it. So a lot of orders were placed here to propel price forward, and then it took a while for pricing to reprice down back into that point. But as soon as it tapped in, we've seen quite the impulsive move back to the upside, or maybe not impulsive, but we can see that there was a lot of sensitivity that we are seeing within this wick, and price is now starting to rally back to the upside. And what we're seeing on the 1 minute chart is not really any clear structure yet. We have this structural point that, like I said, has now been broken. So we're starting to see higher highs and higher lows forming on the 1 minute chart. But even if price comes back down to this point, that would then start a downtrend on the 1 minute chart. But at that point, if we do break this 5 minute high, we can start looking for order blocks. We have this really clean one on the 5 minute, lots of imbalance here. And we also have this one here with a little bit less imbalance. So I just clean that up. I'll just put that in. So hypothetically, what we can plan is if I just put that there and that there roughly, I'm first and foremost waiting for this high to be broken. Let's get rid of this squiggle. So if price does break this and then starts to come back down, I'll just wait for some sort of confirmation entry to go long and target really this point of interest, but I will be wary once price comes to this point just to see if we do get any sort of reaction. And I'll also be waiting for price to come down to this point of interest as well and take the entry long if this one does not provide. Now, of course, if I am able to get involved here, I'll be fairly aggressive in how I manage it, at least moving to break even, because what could end up happening is we could see basically something like this, and then price reacts off of this zone and then continues to the upside. So I won't necessarily want to take a loss here and then miss this buy because I'm frustrated, but if I'm in this trade and I have the opportunity to move to break even, I will, just in safety and preserving my capital, because if price does tap down into this zone, then I can look for that buy to come back up to these points of interest. And that's really what I'm going to be looking at. It's just a game of patience at this point. We haven't broken 5-minute structure, so I'm planning my trade. I'm looking to see what's going to happen next, but as of right now, we haven't actually confirmed anything. It's just more pre-planning on my end.